Welcome to Alpha Wolf Capital. I'm Tim, and I want to personally thank you for stopping by. This channel is designed to help small companies, both public and private, gain exposure with potential consumers, investors, even partners. Take, for example, today's guest, CEO Larry Heaton of Zomedica, ticker symbol ZOM. Zomedica's mission is to bring innovative diagnostics and therapeutic technologies to veterinarians to improve the quality of care for the pet, the satisfaction of the pet parent, and the workflow, cash flow, and profitability of the veterinarian practice. Larry came into this company, they had one product. Today, they have five products. They are generating cash and they are doing great things for pet lovers around the world. And this is one that I think certainly qualifies as an impact stock. But I'll let Larry tell you more in just a moment. This is not to be taken as investment advice. I am not a certified financial planner. This is for education and entertainment purposes only. I encourage everyone to do their own due diligence. Hey everybody, Tim from Alpha Wolf Capital coming at you with a brand new company, but not brand new to me because I've been talking to Larry for probably the last couple of years, and we've been meaning to do this, and finally we're making it happen. Larry from Zomedica, CEO, came in 3 years ago. Ticker symbol on this is ZOM. It's on the American, right? New York Stock American. Larry, thanks for coming in, man.
Happy to be here. Thanks for having me.
So, I think it's important. Well, actually, I'd like to ask you two things. Number one, what brought you to Zomedica?
So, Zomedica, honestly, this opportunity to come and build a company from almost scratch, that had plenty of capital with which to do it, and to help out our own pets at home and pets for everywhere around the world. I mean, I've always been, I've been in the human health business since 1982, and was pretty much done. And a colleague called and said, "Hey, here's a company. They have from a unusual set of circumstances. They have a boatload of capital, but there's not really much there. There's less than about a dozen people employed. Don't really have any products on the market. Haven't generated any revenue. They could use some help." And my background is in that, right? It's launching products, building commercial organizations. It's turning around public companies. It's that. And so, frankly, it looked like fun, and it has been.
So, I guess the icing on the cake for you was the fact that it's pets, right? Animals.
Yeah. Animal health is, I mean, it just, I always appreciated what we were doing for people, but people also can look out for themselves a bit, where pets really can't.
Right.
And this whole industry, animal health industry, it's gratifying to be in it because at the end of the day, you're helping somebody's little kid and their puppy or older dog. And you and I have talked about that on a couple occasions, and we've both been pretty emotional about it.
Yeah.
We all feel that same way. And the industry itself it's easier to work in the animal health business, right? So the FDA, instead of requiring endless,
Right.
time-consuming processes, unless you're involved in developing drugs, you don't have to deal with that. You just have to be on your honor and put out products that are going to be helpful. In addition, it's pretty straightforward with respect to reimbursement. You don't have to go to CMS and get a code and spend 3 years trying to get reimbursement for it. You have a good product. You put it in the market. You support it with clinical data. You put opinion leaders on the podium to tell the other veterinarians about it. They put it in their hands. It works. The pet parent is satisfied. The care is better. And along the way, what we've imbued into our R&D and our product selection criteria is it has to be something that improves the quality of care for the pet and the satisfaction of the pet parent. That's our primary goal, because that's the primary goal of veterinarians. They're
Right.
not in this business to make a boatload of money. They're in it to help pets, but also to help the veterinarians. The other three of our five pillars are it needs to improve the workflow because staffing is a big issue. Try and get an appointment today with a vet. It's tough.
Yeah.
Improve their cash flow and improve their profitability. And we've done pretty well with that. And it's good to help not only the pets, but the vets that care for them as well.
There's not a lot of, well, at least in my area, there's not a lot of independent veterinarians anymore. It's like animal hospitals, right? I mean, it's almost like that's really in Vegas. I think it's the same company that owns all the different animal hospitals throughout the valley. There's very few independent veterinarians, it seems like, anymore.
So I think it's probably a little bit location specific in the country over the last 10 years or so. About 40% of all vet practices, I should say, have become part of corporate groups.
Right.
Some are part of the big corporate groups like Mars, that owns the Banfield that's on every other corner, and VCA and Blue Pearl, all those owned by Mars. But there's also a lot of entrepreneurs that went out and acquired 15, 20, 30 practices and put them together. And there's good reasons for that.
Right.
Um, but at the end of the day, 60% of the vets of the practices out there are still independent. And what we find is that whether you're an independent vet who needs to be able to turn a profit so that they can pay their people and continue to work on behalf of the pets that they serve. Or it's a corporate group, which is going to, there it's a whole different deal. You're a corporate group. You need to show growth on the top line, growth on the bottom line, just like we do here at Zomedica. So our solutions, we think, are appropriate for whether they're corporate or whether they're independent. When we were when we had a single product line or two product lines, it was a little tougher to get the attention of a corporate group.
How many product lines did you have when you came when you came in?
So there was one product. It was our TrueForma analyzer, and we had three assays, and the total revenue from launch to then was about $50,000.
God.
And there was, very little promise of any more assays to come, at least in the near term, as our relationship with the collaborator, wasn't the best. Today, it's different. Today, we have five product lines on the market. That TrueForma line has gone from 3 assays to 12. We just launched one this past week. Uh, and there's no end in sight because we acquired the company. In fact, over the last 3 years and I guess a couple of months or so, it's been just over a month after my 3-year anniversary here. We now not only have those product lines on the market, but we manufacture all of our own products in our facility in Georgia or our facility in Minnesota. We reported last quarter 72% gross margins. The quarter before that, 72% gross margins. Last year was 69. We expect to end the year 69, 70%. So we're not only, just trying to grab a product and go out and make a quick buck. We're building something here. We're building the capacity to be able to develop our own products through R&D. And we're high tech with that. We're integrating AI into a couple of our products, already in a couple, field testing the microscope with the AI now. So we're manufacturing super efficiently, generating good margins. We've gone from a handful of people to about 150. About a third of those are actual people that were working on the assembly lines making the products. About half of those are sales marketing people out in the field, knocking on doors of veterinarians or they're veterinarians themselves providing clinical support. So we've come a long way in the last 3 years.
You and I have had several conversations about different companies and that could be potential targets for acquisitions. And I mean, you guys are really, really thorough about how you vet a company and whether or not it makes sense, right?
Yeah, no pun intended, right? Bet in a different kind of way.
Yeah, I kind of, I thought I'd throw that in there. It's pretty good, right?
Well, I won't. I'll do you the favor of not pointing out that one of those companies that you indicated early on is no longer in business, right? It's you got to be careful out there. You know, a lot of people. A good idea is a job half done, right? So sometimes there's good ideas, but it's the wrong time, place, the wrong execution. So
Oh, listen, you just nailed it. It's funny to me. It's not funny, actually. This is kind of sad. It's become very apparent to me. I've been doing this for a long time, and I've come across companies that have really, in my head, amazing products or services or whatever that solve problems, and it's always like baffling to me why these things don't become adopted at a much faster pace. And I don't care what it is. It could save lives. If it's a process or something like that, not a drug. I mean, when it's a drug, and it gives you more time, you're going to take that right away, right? But if it's like a process on a job site that would make the job site safer and maybe stop someone from having an accident and death, right? Well, that's not something that's threatening, like saying, "Hey, if you don't take this pill, you're gonna." So the process of people adopting a new process is like really challenging, right? So if you think you're going to build something and they will come, that's the field of dreams.
right,
That's not reality, right? I mean, you don't. It's like you solved half the problem. You built it, but now you got to get people to adopt it, and that is sometimes brutal, right? I mean, it just could take a long time, and if you don't get people to adopt it within a certain, that's how companies just wind up going away, and that thing that was brought just disappears, right?
yeah. Well, there used to be a saying that said, if you build a better mousetrap, the world will beat a path to your door. I found that to be not true.
True.
We don't hear that saying anymore because I think that people found that out. You know, my friend, I have a buddy who runs the butterfly company, and he's fond of saying, with the new technology and new products, it takes 10 years to become an overnight success, right? So and that's what we do here at Zomedica, right? All of our products they're cutting edge technology. And there's a monitor that doesn't have anything touching the animal and picks up the pet's vital signs remotely without having to touch the animal and maybe get bitten, which rarely happens. But also don't touch the animal and disturb it. We've all been in the hospital and they come in and wake you up to make sure that you're sleeping, right?
Right.
And to also get your temperature and this and that and the other thing. Well, if you're having to disturb that animal to get a thermometer, and you're not putting that thermometer in the animal's mouth,
Right.
you're disturbing it, right? Every 10, 15, 20 minutes. So that's cutting edge technology, imbuing AI into the microscope to give interpretive reports, automating the slide preparation, performing assays that can't be performed by other technology, the shockwave system that's just absolutely one of the best therapies that you could provide an animal. All this is new to our customer base, and so it's not a simple matter of waiting for them to beat a path to our door. They're busy. They're super busy. And so how
Yeah.
do we get to them? Well, we deploy a field organization to go out and contact them. And how can we help you? That's what we're here for. But they also go to these trade shows. They have to go to these conferences because they need CE credit, continuing education hours. And when they go, they bring their checkbooks. That's where we are. And yes, with a booth and have them come over and see us in the booth, but more than that, we're also putting up key opinion leaders, well-respected veterinarians in the field on the podium, at the podium at these conferences, so that they can share. Hey, here's some new technology you haven't heard about. Here's the clinical data that supports it. Here's my own personal experience, and their booth number XYZ. Go see them.
Was that something that has always been in the veterinary space? Is that the key opinion leaders? Has that been something that's always been there like it is? I know that's very prevalent in human, right? That's you get key opinion leaders there. Was that a big thing in veterinarians as well?
I believe so. I mean, my experience in animal health dates back 3 years and a month or so.
Right.
So I don't have personal historical experience, but that's my sense of it. You know,
Okay.
we were fortunate. We acquired a CC Animal Health. It's a nice product, and it's going to give us modest growth. But we acquired it for two reasons. One, we liked the fact that it had good margins and would provide us with cash. But also, we really liked their marketing team. And at the time, we didn't have anyone. We didn't have a marketing department when I first started. We didn't just another one of the things that we needed to acquire. And so we brought over that team, and we not only put key opinion leaders up at the podium at these conferences, but we also host Zomedica University every Wednesday. And that provides an expert in the field that is giving a talk, a webinar on a particular disease state or how to deal with an injury or how to diagnose an illness or what have you using our technology. I mean, obviously, we're not doing it just for the goodness of our heart. It features one of our products. And after every one of those, and we get leads that come in to the website that said, "Hey, I just heard Dr. Osborne, or I just heard, Dr. Alvarez." And so between what we do at the conferences, what we do at Zomedica University, and also clinical research. I just mentioned Dr. Alvarez. She's from Animal Medical Center in New York, which is like the Sloan Kettering in animal health, right? Although not just specialized on cancer. Um, that team, without us being involved, I mean, we're happy to be involved in other areas, but this one, they did it on their own. They treat working dogs, German Shepherds that work for the government, TSA or police, military. And one of the things that afflicts German Shepherds is fibrotic myopathy. And according to the words of the researchers in the article that was published in the peer-reviewed animal health literature, fibrotic myopathy is nearly impossible to treat. And the dogs certainly can't work. Well, they treated dogs, a cohort of dogs, working dogs, and found that by using PulseVet, they were able to extend the working lives of those dogs 32 months
Wow.
on average. Well, it's not, I mean, I'm not sitting here, oh my goodness, great. We got more work out of those dogs. It was their quality of life was such that they could do the thing that they had been trained for. And frankly, they love to do. And
Right.
then when they're done, then they're not, a wreck. Now they have a life. And, that's just gratifying on so many levels. And so between that, there's a researcher on the horse side that found that you could use our technology, PulseVet, to treat respiratory conditions of horses. There's a disease called bleeders that affects certain kind of horses that give it their all in a barrel race. But then further found that, well, actually, the way we're treating that is we're treating successfully the asthma. Well, now you're talking from a little study that affects a small segment of horses that race around barrels, which is a
Right.
good thing, I guess. I'm not that well versed with it, but it's cool. Now to treating an affliction like asthma in horses that affects something like 12% of horses over 8. And when you think about somebody that has a person that has asthma, what do? You have to put an inhaler and they have to hold it there, and it's tough to get compliance with a person. Now think about putting that on a horse,
Right.
right? I mean, you better be on good terms with that horse before you start sticking that thing over their nose. But what this fellow found, this researcher found, was that you treat them with PulseVet and you're good. They're no longer coughing. I learned that horses cough when they have asthma. I didn't know a horse could cough, but yeah, that's one of the symptoms. You treat them with the PulseVet, and then that's behind them. Maybe not forever. We did one of the original horses from that cohort lasted about 6 months before they start coughing again, and then they got treated again and they stopped. So it might be something that needs a couple of treatments a year, or they're still looking into that. There's now a deeper study. The pilot trial went very well, so now they're doing another study. There's another group of researchers that, based on a successful pilot, are doing research into hoof growth of a horse. Apparently, the depth of a horse's hoof is important, and a pilot trial found that using shockwave on the hoof made it thicker. So that's good, but let's not just take that one little set of one researcher. Now it's being done at an academic center so that it can get published and so on. So it's not going to take 10 years to be an overnight success here. But it does take time. And when you have one product and you're moving that along, that's good. We have 5 that we're moving along. And wow.
What you just reported your numbers. What were the revenues for this last quarter?
Yeah, so we did 7 million overall. We were up about just over 10% over a year ago. We were up over the previous quarter, we're up like 14%, but up year over year about 10%. Our PulseVet products were up 24%, both the capital and the consumables. One of the things that, I mean, we're also in this to improve our shareholders, finances as well, right? We're in this to make money, right? So, we'd like to do well by doing good, do good by doing well, right? But when you look at our business model for PulseVet in particular, we sell the system for $30,000, and it's a good buy, right? They can get it, they can pay for it within a year, easy. But that system requires a handpiece to work, and the handpiece that we sell them has enough pulses in it that it will do, call it 50 treatments for a horse, 60, 65 for a small animal, but let's call it 50 to math a little easier, right? That equine vet is going to go through, on average, 3 of those hand pieces in a year. They're picking this up 3 times a week on average and using it, right? So they're going to go through 3 of those hand pieces in a year. So when we sell a system today to a new equine vet, we know we've got revenue coming in the next 12 months of $6,000 and every year thereafter. And that's what the current indications. Now add asthma onto that, add hoof growth onto that, add who knows what next onto that. And then maybe that 6,000 becomes 8,000 or 7,000 or 12,000. We don't know yet.
Right.
And so for us, our consumable business was up 24% and our capital business was up 24%. You contrast that with the quarter before, the second quarter, we had a bunch of salespeople really unexpectedly out of the field. We had 5 of them, which was 14% of our field sales force. And when you're selling capital, clearly you got to have somebody there to talk to people about it. And this wasn't maternity leave. This was, someone had a heart attack, someone's back whacked out and stuff. So our capital sales in the second quarter were down, but our consumable sales were still up. And so now this third quarter, of course, the salespeople returned. Even the fellow that had the heart attack came back.
Oh, good news there.
Yeah. So with that, capital sales, not only rebounded, but also, all the sales that had been missed in the second quarter were kicked in. But even if we had no capital sales, our consumable revenue, which today in the company overall is about 65% of revenue, that's continuing to grow, even if we put no more systems in the field.
Right.
The growth in that revenue.
So that's kind of a far cry from 54 grand.
Yeah. Yeah. Yeah, it is. It is. Last year we did about just over 25 million. We figure that's about 1% penetration in total of all of our available market on an annual basis. This year we'll obviously do more. We need to get to 2% penetration, not 20 or 22 or 200, but 2% penetration to get to 50 million in revenue. And when we're at 50 million in revenue, we go cash flow positive.
Okay.
And so beyond that, then the sky's the limit.
So I would say you've done a tremendous job, Larry, in 3 years, right? I mean, I always look at it when somebody new comes in, typically it takes about 2 years to get the the new regime's culture and everything in place, right? About 2 years. And then you start seeing that's when you should see that leader's plan start to formulate, right? That's when you start seeing things happen. And you're definitely seeing things happen, right? So you're on the right path, but you've got challenges with this particular company that you're not responsible for, but you still have to deal with them, right? And one of the things is a very high share count, and that's a challenge because you have a lot of when you have a real high share count, and you have a real a penny price, it makes it you get all kinds of short-term characters making trades all day long, making pennies, right? And they'll do that all day long, and it makes it really tough for the stock to get traction, right? And I think that's probably one of your biggest challenges. How are you on cash?
About $79 million in
Okay,
liquidity. And it's not all cash. It's invested. We're not putting capital at risk in our investments, but we're still generating, the kind of interest that people can see.
right.
So we have plenty. I mean, during the course of the year, our total use of cash has gone down each quarter. In the third quarter, we burned operating burn of about 4 million. During the course of the year, that operating burn has come down each quarter. The total use of cash has come down each quarter. And the use of cash in excess of what we need for operations has really been almost all focused around one-off expenditures involved in uh, getting our Qorvo Biotech acquisition integrated into Zomedica. So there's a history there with Qorvo Biotech. Qorvo announced that they were going to sell that division, Qorvo Biotech, and we were in the process at the time of trying to take over the R&D and the manufacturing and moving that to our plant in Georgia. And when they told us they were going to shut it down um, because they weren't successful in selling it, they were going to shut it down, but keep the people on the vet side because they invested heavily into the human side. No market for that because it was to test for COVID, and COVID was in the past as far as they were concerned. Um, we we didn't think that was a solution. We didn't think that people that were on the vet side would stay just another 18 months just to help us get to the point where they could lose their job. So we acquired them. We got a really good deal on the acquisition. We acquired lots of component parts and so on. But then we had the expense of dismissing the people on the human side, preserving all the value on the human side and putting it on the shelf in a pristine fashion so it could be later commercialized to someone that's in the human market. We had to lay off the employees that were no longer needed by us and do it in such a way that the other employees decided we were a good company to stick around and work for. We picked up the facility in Minnesota. Um, we invested over $5 million in a robotic automated assembly line so we can make the heck out of these cartridges going forward with better yields and higher quality. That all took money. And, it was just a year ago that we acquired them. And so during the course of the year, we spent money that we didn't anticipate spending the year before, right? Before we acquired them, we had a different trajectory in terms of our cash burn and so on. But that's
Mhm.
pretty much behind us now. I mean,
Right.
there'll always be someone will need a new laptop or, a new chair or something. I don't know. So there'll always be some capital expenses that will
Yeah.
be in excess of our operating burn, but all of the big capex expenses are behind us. So we expect. Well, I'll give you an example. In the third quarter, our our operating expenses were nearly $1 million less than the previous quarter, 900,000 and some change less. Um, with that ability to do that going forward, to either maintain or actually reduce some of our OPEX, certainly OPEX as a percentage of revenue will come down.
Right.
And with all of that, we've got plenty of cash to get to profitability and cash flow breakeven.
What are your margins typically there?
So we talk about margins being between 65 and 70%. But in actuality, last year, 2023, full year margins were 69%. First quarter of this year, I think we were at 66%, and that was when we were hot and heavy in integrating the Trueforma product line. So we had lots of one-off expenses associated with getting that line, transferred to us in Minnesota. The last 2 quarters, they've been over 70. We expect the full year this year will be around 70. So, we try and be conservative in what we say. So, I suppose we should say instead of 65 to 70, maybe 68 to 72. But, and that robotic line, while it was, like I said, over 5 million by the time it was installed and everything else. We're still validating that line. We got most of the assays or the cartridges validated on that line last quarter, but we still have a few that we're finishing up this quarter. By the end of the quarter, all of our cartridges will be made on that line. And so instead of running 2 lines, one automated, one manual, we'll be running 1 line. And that bodes well for margins as we move forward. So
if you're sitting here listening to this conversation, if you were to listen to all the things that have been accomplished, you would think, man, the chart must be looking pretty good on this stock, right? Because it sounds like there's been a lot of positive things that have happened, right? Still good on cash. I mean, you came into a good position where that was the saving grace for you, is you had a boatload of cash to mess with, right?
Yeah.
You've spent that cash well, right? And it's proving to now you're starting to reap the rewards of what you spent that cash on. And it's going to continue to get better because you just up the equipment, and like you said, the yields are going to get better and the margins are going to get better, right? You're going to be able to make more units. So all this is all positive stuff. So how have you been rewarded with the share price?
Well, reward is a relative term. I don't know that I think, look, we really do appreciate all of our shareholders, even the ones that are holding the shares just for a minute, and they're shareholders too. But we really appreciate the shareholders that are looking at the company and saying that we want to be part of this. We want to see this grow. Our investment is in a company that's helping our pets. And so that's an important factor. Having said that, it is, I won't tell you it's not disappointing to see that the share price is what it is, but because the combination of factors, right? So we have a lot of shares outstanding. And so even though we're valued at, I don't know, 140, $150 million, depending upon, our market cap, depending upon where the share price is today, you got a strong market cap in terms of the value of the company, but there's so many shares that it means that the share price is down where it is.
Right.
And the share price where it is provides something for a potential investor to really think about, right? It's below the 20-cent threshold that the NYSE American has for listing. We've been assured by the exchange that we're okay to continue to stay listed unless it falls to a really low level. So you have some people that are looking at that. You have institutions that aren't able to buy shares because the stock is below a certain price. Heck, we were on the Russell for a minute, In 22, we went on the Russell, or 21, I guess, 2022, we went on the Russell, but then we came down from the Russell when our share price went below $1.
Right.
And when you're in the Russell, and ironically, we did attempt a reverse split. It wasn't well received. It failed. But was shortly after that we were re-reviewed by the Russell, and we met every criteria except the share price.
I
And
guess
of course, when you're in that index, then companies that track to the Russell need to buy the shares. And when
yeah,
you're no longer in the Russell, then they sell
they,
the shares, right?
right.
So there are certain challenges to our shareholders, and as a result, our shareholder base is primarily retail investors who we appreciate immensely. Very few institutions. The institutions are primarily index funds, and so it's a challenge. But at the end of the day, the retail investors have every right to see the share price rise. And
Look, they have every right to see the share price rise, but here's the rub. The rub is, I understand people don't like reverse splits, because I would suggest that most retail investors that have been through reverse splits have been through reverse splits with companies that are splitting to stay listed, but they're really not good companies, right? So, and my dog agrees.
puppy.
And look, splits. I happen to love reverse splits. I will tell you why I have not personally gotten into Zomedica yet, is because that bloated share count it makes it so hard for you to. I mean, you're executing. That's clear to me. I like Larry. I like what Larry's doing. I don't like the share count, and until that changes, I'm not getting involved, because you've got players out there that will trade pennies all day long. That's what they will do. They'll trade. That's how they make their living. They scalp all day long. They're not investors, they're traders. And then when you have a boatload of shares, it makes it so tough. When you have a smaller share count, and you've got real investors, you've got funds that are involved, go ahead and try to scalp it all day long. See what happens. Try to short it. See what happens. Right now, you're executing, you're not being rewarded, because now they know you are below that 20-cent line, right? And you could be kicked off, which is going to put more pressure on you. And it has nothing to do with what's happening with the company. It's these guys that know how to play the game, right? That are making it difficult on your shareholders. So, look, I know I have been in other companies where I've said, look, when the timing is right, you do the reverse, right? Because you're doing it from a position of strength. It's very different from doing it to stay listed, right? Or to, just to be able to stay around. You still don't have a business plan, but your plan is you're gonna do a reverse just so you can survive to maybe do another cap raise. That is not this company. Those are two very different scenarios, right? This is a company that is doing everything right, and I think with the smaller share count, you're gonna attract those funds. You're gonna get those players in, and everybody's gonna make money, and everybody's gonna be happy. You can have a bunch of shares, but if those shares don't go anywhere, what good are they doing you, right? I mean, I'd rather have less shares and have the stock price going up, right? That's what I want to see. Take me, let's go, right? I can deal with less shares, and I can always buy more shares if the stock is starting to climb, right?
Yep.
Right now, it's in a downward trend. You have turn this company around. It is not even remotely close to the same company that it was. It's not even close, right? You are very diligent with the money. You're very transparent. I mean, this is a good story. The thing that makes it hard for the shareholders, and until they decide to bite the bullet, it's gonna stay hard. I mean, I hate to say that, but that's the reality of it, right? So look at it and say, okay, wait a minute, this makes sense. If the price is not in the pennies and it's in the dollars, that means now you can get institutional investors involved, and now you got some real players, right? Yes, I understand that you've been through a very painful ride. This never fun to be in a stock like this. It sucks, right? That can change. That can change in a heartbeat. You have to deal with this thing that nobody wants to deal with. That's just my personal opinion, and I'm not going to go any further with that. I'm just going to say, this is the reality. It's taking your medicine, but you've got a company that is executing, man. That this is the exciting time. This is, like you said, you're having fun, right? The only thing you're not having fun with, I mean, it would be a lot more fun if the stock price was cooperating too, right?
Yes, that would make it more fun and certainly more rewarding for all of our shareholders. I think that people that have bought shares and will hold them long are going to be rewarded eventually. Um, we attempted to do the reverse split, and it was really an example of what you'd said earlier. We got the notification from the exchange that we were below the threshold, and so we then went to the shareholders and said, we want to stay listed, we want to preserve the listing, and so we want to do this. And as you said earlier, that in itself was, not viewed necessarily as the reason to do it. The other thing that I think scares a lot of people is that oftentimes a company is limited as to how many shares they can issue by their charter. And when they get up against that, they've issued all the shares that they can issue, and they need to raise money, then the only way they can raise more money by issuing more shares is to do that reverse split, bring the share count down, and so on. Well, in our case, we're a Canadian corporation. We're not limited as to how many shares we can issue. We don't need shareholder approval. We could issue shares tomorrow if the board said issue shares tomorrow. So that wasn't a factor with us. But we were not cash flow positive at the time. We're still not. And so really where we are is we're back to where we were when I first started. When I first started, I didn't immediately go for the reverse split, even though I knew from the get-go that the number of shares was going to be a problem for our shareholders. Instead, I said we would wait until we were cash flow positive, and then we would do it. And then we got the delisting notice, and so we went ahead and said, okay, we changed our minds. That was really interpreted by many shareholders to be we were lying before, which honestly was not the case, I promise you, but it doesn't matter. That was perception, and that's reality. So at this point, where I am in my head is the shareholders who are long in the company, including my 4 grandchildren, right? Who are 1 and 5 and 3 and so on, and even one that's not born yet. The window opened for us. I bought another 100,000 shares for my 5th granddaughter to be. Anyway, people that hold on to the shares are going to be rewarded, right? They are, because we will get to cash flow positive. We need 2% penetration of our available market. We're at 1 now. We're beyond that. We're more than halfway there. We've got plenty of capital to be able to fund our organic growth through profitability and do additional acquisitions if we choose. We will get to cash flow positive and profitable, and at that point, then we'll say, okay, now we'll try it again. We don't need cash. We have stayed listed this whole time. I'm thinking of the future now. This would be a forward-looking statement, right? We've stayed listed, so we're not doing this to stay listed because we already are listed. We don't need the cash because we're now making our own cash. We're profitable. And so now, please, let's take another look at this And whatever the shareholders decide at that point, we'll respect it and honor it. If they would rather see just take a long time, or a longer time, let's say long, if they would prefer a longer cycle, then it's their company, right? I'm entrusted to shepherd it, but at the end of the day, we'll respect their wishes. I think that we'll get to a different outcome than we did last time. But this is the future after profitability, after cash flow positive.
Let me ask you this. If you did it sooner, could you get, look, no, could you get to profitability faster, do you think, if you did reverse? Or
No,
would it matter? It wouldn't matter.
I think they're completely different things, right?
Yeah.
We'll get to profitability based on our ability to grow revenue, maintain high margins, and keep expenses to the minimum required to run a public company, launching 5 products and doing the market development to grow those, right? I mentioned earlier, third quarter, we were down expenses versus the second. We have things that we had to spend money on that we don't now as we move forward. All of that, we're doing all of that. I mean, we've had 14, I think we had 14 quarters in a row where we set a new record for revenue in each of those quarters relative, like the record third quarter revenue, record second quarter revenue, record fourth quarter revenue. We expect set another record this quarter, right? And make it 15 quarters in a row. So running the company and having the company do well is here. Our stock price doesn't seem to be connected necessarily to that. There are other things that you've mentioned that are probably a factor. So we'll get to profitability regardless of what the stock price is. But we're here to build value for the shareholders, and that value is measured by the stock price. And so first, let's get you a profitable company that will last forever because we're making our own money, and then we'll take a look.
So what do you
can buy stock now, Tim, and you can be sure that you will benefit over the long haul. Join my grandchildren.
So listen, what are you projecting out? When are you projecting profitability? Do you have a time frame that you feel is reasonable?
So we haven't given a guidance on that, but what we have said is that when we get to an annualized run rate of $50 million, so the first quarter that we're at, $12-13 million in revenue, which is, last quarter we did 7. And third quarter is generally not the high water mark for the year. The high water mark for the year in terms of revenue is generally the fourth quarter. And so you can take you can probably see that we're, as we finish out the quarter, you could kind of think of where we might be, and it would be, half again more, and then we're at a profitable revenue quarter. So,
do you go? Is your business cyclical? I mean, is there? Yeah,
a little bit. So, most of our products, all of our products, have some kind of recurring revenue component to them. That's why we selected them, because that's what we like, the recurring revenue model.
Yeah, I love that.
But we also sell capital, and a good amount of capital each year. And most of that capital sales come in the fourth quarter.
Okay.
Right. So, and there's reasons for that are associated with the buying patterns of the veterinarians, especially the equine vets. The equine vets have one big trade show a year. It's the AAEP. It's in November or December each year. This year it's in, I think, late November, or maybe it's early December. It's a couple of weeks from now, 3 or 4 weeks. And so we sell a lot of capital in the fourth quarter. So revenue spikes in the fourth quarter, and then it comes down in the first. The recurring revenue continues to grow, but the capital revenue drops off in the first quarter because they all spent the money end of year, take advantage of tax breaks and all that stuff. And then revenue builds modestly during the year, first quarter, second quarter, third quarter, and then it spikes again in the fourth. And that's been the pattern for the last several years.
Got it. Okay. You're starting to get on my nerves a little bit. So, you and I always talk, you're always looking. You're always looking for potential acquisition targets, right?
Yep.
Opportunities. You got anything hot right now? You want to break any news here, Larry?
So we're firm believers in full disclosure, fair disclosure to all shareholders, and I have nothing to. I can't really answer. I don't want to give you the wrong answer to that. I don't want you to give you an incorrect answer to the question, so I just won't answer it.
All
Right.
right. Okay. Cool. All right. What else? What else are you? What do you see as a potential catalyst over the next quarter, 2 quarters, 3 quarters? You expecting anything of any significance that might move the needle?
So I think we expect a lot of things of significance that will move the needle in terms of the company's performance, right?
Okay.
So we spent a year this year getting our products ready for the international market. PulseVet for horses is sold in 30 countries in the world. So very nice presence. Assisi is in many countries in the world, but our diagnostic products were not. So during the course of this year, and we've announced them as they've occurred, we've gotten CE marks for our TrueView microscope, the VetGuardian monitoring system, and the TrueForma
How
analyzer.
big of a growth opportunity is international for you?
It's pretty good. I mean, all in the medicalized pet market, animal health market outside the US is roughly equal to the US. And so, of course, a lot more people, a lot more animals, but in other countries, it's not the number of dogs, it's the number of medicalized dogs, dogs that, are going to get taken to the vet if there's something wrong, right? Cats taken to the vet and so on. I'll give you an example. We have a subsidiary in Japan that currently sells the PulseVet for horses, equine vets. And we're now in the process of getting the approval to sell our diagnostic products in Japan, TrueForma, TrueView, and VetGuardian. In the US, there are 30,000 small animal practices for us to sell to. In Japan, there's 12,060 small animal practices. And pets in Japan are highly medicalized. The humanization of pets is happening here in the U.S., but there's still, I'm sure, some places, farm where the dog sleeps outside, right?
Right.
My mother-in-law's German Shepherd. He slept underneath the house, right? That's the way he always did, right? If he was sick, he came to he was medicalized. He would go to the vet, but he's not sleeping in the bed. In Japan, a lot of young people are pushing their dogs or cats around in a baby carriage, and they're choosing not to have kids, right? So, I mean, it's not the majority or anything like that. I'm not trying to say that. I'm just saying it's the same kind of thing. I mean, my son's mother-in-law actually has a baby carriage, and she pushes her little dog in it as my daughter-in-law pushes the baby next to it, right? So there are two things going on. So very similar market there. The UK, France, Germany, Australia, a lot of these places have high levels of medicalized pets. So international sales have been 15 to 20% of our total revenue in any given quarter. We expect that to stay the same, but only because we're growing both markets proportionally. We've announced during the course of this year a number of distribution arrangements, and we have others that we have not announced that we're working on. The idea being to really, make a significant impact in international markets. And there, it's not only do we generate more revenue, but the revenue comes without an increase in expense, right? So when we sell to someone in Saudi Arabia, for example, we sell to a distributor, and yeah, we sell for less than our full retail price, right? But after that, there's no additional expense. We're not deploying a salesperson. We're not inventorying it. We're not doing any of that.
That's what I was going to ask you. I mean, you're not expanding. It's not your sales force. You're partnering with people that are there.
That's correct.
Okay.
Right. Even in Japan, where we have a subsidiary, we don't deploy feet on the street. We only had a single product initially, and that wouldn't have been cost effective. we truly are looking for ways to leverage our operating expense. And if you're wondering what that noise is, there's someone blowing the bushes outside my office with a leaf blower. Yeah. Thank you. Anyway, sorry about the noise.
No, it's fine. I can't even hear it, man.
Yeah.
All right. So, international expansion, I think is a good thing, right? I get my question on that is, and that I find this with, you have these manufacturers reps, right? You become a line item in their catalog, right? Uh, in that they're not necessarily real focused on selling. I mean, if your specific product, right? I guess that's the challenge when you don't have your own sales force, right?
No, that's exactly right. The thing is, if we were selling, gauze pads or syringes or something, we wouldn't be launching internationally because
Right,
there'd be no reason for but all of our products are very unique, right? The PulseVet Shockwave, there isn't a better
right,
alternative. Our Vet Guardian, it's interesting when I see the influx of leads. Whenever we do a release about a CE mark or whatever, we get a ton of leads from all around the world asking for these products. Do you sell it in this country? Do you sell it in that country? And the idea there is by having highly differentiated products, then it not only is there some demand that is pulling the sales rep's attention, but also the sales rep in these countries says, hey, I have something that's totally unique. It's from America. It's totally unique. It's a way for me to get in and demonstrate my value to my customer base.
right,
And so, we expect that to continue. And frankly, there are countries where we won't go, right? The economy won't support a reasonable price for our products, or the pets aren't medicalized,
right.
or whatever the case may be. So we're selective in where we go, but we also are, and so we have sort of two sets of distributors: those that we think are of strategic importance, countries that are of strategic importance, right? The UK, Germany, France, and so on. And then there are countries where you might think, well, was Costa Rica the number one on your hit parade? Was Turkey the number one target? Was the Middle East the number one target? No, they weren't. But those distributors came to us and said, I've seen your products. I want your products. I want to sell your products. To which we say, okay, we'll work with you on that, right? Doesn't always work out. One country came and then they said, but we'd have to have this price. And we said, well, that's not a reasonable price for us to
Right.
charge, right? I mean, it's not at all costs. We want the revenue. So, I mean, one of the biggest things we've done is we now have a distributor for all of Europe and the UK and Switzerland uh, and the Scandinavian countries for PulseVet for horses. And we just recently announced they're now going to be carrying Truforma, the lab analyzer, because we've been developing and deploying assays for horses. So EACTH for equine Cushing's disease, equine insulin for equine metabolic syndrome.
Which you just launched, you just shipped out your first batch yesterday?
Yeah, we launched it last week. Our first day of shipping was yesterday. We shipped a boatload of orders, not only for the equine insulin, but also equine EACTH. So if you have a horse that you think has Cushing's disease, you know that 30% of the time they have Cushing's, they also have insulin dysregulation. And so when we went out to vets with equine EACTH, many of them said, great, let me have it. I can test them right here. And I have a need for testing them on an ongoing basis. So this is terrific. But some of them said, yeah, but I do the diagnosis and I always want to test for EACTH and insulin up front. And if I have to send out the one for insulin, I might as well send them both out.
Mm-hmm.
Well, okay, now we have them both. And so we not only have heard from customers, hey, you now have insulin? Okay, give me insulin plus the ACTH. I'll now start using that. And yesterday, I just saw the report this morning. We shipped out a boatload of not only insulin, but also even more EACTH. So we're pretty happy with that.
Yeah, I would imagine. So you're getting some cross-selling, you're getting some cross-pollination there, right?
And now True Pharma will now be available in every country in Europe where we're selling PulseVet through Grovet.
Yeah.
So prospects are very, very, very good for the company, and I think for the stock as well. Join me in that, Tim. Place an order today.
No, Larry, listen, man, we're having this conversation because I like what you're doing. I like you. You're a good guy. You're a transparent guy, and you've done an amazing job, and you haven't been rewarded. And some of the things are just beyond your control, but everything that you could control, you're executing, and that's got to make the shareholders. It should make the shareholders appreciate you and understand that you can't control all aspects of the stock. That's just not possible. Yeah.
Well, let me say this. Thank you for the accolade. I'll accept it on behalf of the team here. We have a remarkable group of people that have come together, and they are, all very like-minded with respect. We're a dog friendly, we're a pet friendly, although no one's brought a cat to work, but we're a dog friendly office. And we're all here for the same reason. And it's not me on my own, believe me on that. The best thing I've done is hire people that know what they're doing and give them an opportunity to do it. And the other thing I would take issue with is I have been rewarded. Every time I see the face of a pet parent when their dog barely limped into the room to get a shockwave therapy and they walk out, and we have to tell that pet parent, okay, make them take it easy. Don't let them chase a mailman, right? It's going to take a couple weeks for the full effect of this treatment, but they already see the treatment. When you see the look in their eyes, that's a reward. We're rewarded every day.
Well, I guess yes, you do get rewarded, but you deserve also. The stock needs to reflect what you've accomplished. Okay,
that would be great.
I will say this. I mean, I've had recently this, and I don't know if I told you this or didn't tell you this, but as long as I've been doing this, when I first started investing, it was all about just making money. I just want to make money for me, right? And then as I got older, I wanted to help retail investors become smarter investors, which, in this day and age, instant gratification is this new thing that everybody expects. They want to buy a stock and they want it to go up 300% in 2 weeks, right? That's not realistic. That's not investing. Investing is what I did was I bought stocks and I researched the company and I bought it for a particular reason because I thought that over the long term there was going to be a nice win, right? And it doesn't take very many of those to have a really nice. It's an amazing thing. I love finding good companies that nobody else is really paying attention to. I like finding companies early that have products or services that I think are going to revolutionize an industry. I like that, and I like seeing it, and I like getting in early, and I'll go through all the bullshit pain and waiting because I know at some point it's going to happen. I can't ever tell you when. I can never, my crystal ball is so screwed up. I could never tell you when it's going to happen, but I can tell you it will happen, right? Because sometimes it's like the weirdest little thing that pops something off too. They'll have all these incredible news releases and nobody cares, and then all of a sudden this stupid little thing will happen, and that'll be the thing that triggers it. It's amazing, really. The whole market in general is just a fascinating thing to me. What I think consumers and it's part of it is Wall Street is a big part of the problem. That they tell people stay away from penny stocks, stay away from, because they're penny stocks for a reason. They're garbage companies. Well, I got news for you, man. Apple at one time was $1 a share. I mean, I can go down the list. Every major company at some point in its existence was a penny stock. I mean, it was a startup company. That's the way it works. The job is to find them before they become the Apples and Nvidias, right? And Wall Street doesn't want you shopping down there because they need the retail investor to buy the expensive shares of the stock that they're trying to sell because they bought it back when it was in the pennies. So that's what they've done a really good job of telling people. And this is a prime example. This is a real company. This isn't a smoke and mirror fluff piece company. This is a real company that has real products, that is having real results with pets, which are near and dear to me. I am a dog person, 100,000%. I mean, dogs are better than people. I'm sorry. My dogs make me smile every day. My dogs have never done anything to hurt me. They're just there for love all the time. And I love that about animals. So what is important to me is finding companies that are doing things that have a positive impact on humanity. And you just kind of laid this out for me. I'm trying to start this thing called, I mean, there's a thing called impact investing, but it's very narrow in its definition. It's associated with ESG. You just proved the point. When you came in, how many employees did you have?
Well, 15,
Handful?
something like that.
Handful? Okay, 15. How many employees do you have now?
150.
When you help a little company become a big, large, profitable corporation, how many lives do you impact positively?
That's right.
So I came in this world with nothing. I know I'm 99.9% sure I'm leaving with nothing. So what matters is what we do while we're here, right? I would like to have as a positive impact on as many lives as humanly possible while I'm here, right? And one of the best ways to do that is to help a small company become a large corporate. That is what the stock market enables you to do. Become part owner, and that's what you are as a shareholder. You're part owner of a company that is making the world a better place, right? I mean, that's what it's all about to me. I'm not smart enough to fix all of humanity's problems, but I guarantee you there is a company, if it's been a well-defined problem, there is somewhere someone is trying to solve that problem.
Yep.
And they will. Somebody will solve that problem, right? That is what is amazing about human beings. I mean, when we set our mind to it, and with the technology that we have today and artificial intelligence, all this stuff, this is an amazing world. This is an amazing place right now. And you said you're incorporating AI into some of your stuff, right?
Yep.
I mean, tell me this isn't a fascinating time to you, Barry. I mean, right? The things that we can accomplish is just, and I love that. I love that about the small businesses, and I want to help them. The biggest problem is a lot of times is that people aren't aware that solution exists, right? They didn't know about it. So the best thing that we can do as investors and part owners is not just buy the stock and hold it and hope good things happen. Open up your network. Every time I look at a company, I think to myself, who do I know that might be able to benefit from this product if they knew about it?
Yep.
Right? Who could I put these guys in touch with that maybe the two of them can help each other? I mean, there's so many things that we can do to help a company become recognized and become known for the thing that they're doing, and get that adoption curve to gain momentum, shorten the curve. More people know about it, the more people that you get talking about it, brand ambassadors, whatever you want to call it, influencers, let people know that these things exist. And guess what? Everybody benefits. Everybody benefits, right? That is my thing. I'm on this mission, man, because there are so many companies that are doing amazing things that nobody knows about. And they're little companies. And those little companies can become big corporations. And what happens then? Not just all the animal lives that you're impacting in a positive way from your product, right? And then the parents of those, that's a positive, right?
Yep.
But then if you actually own shares in the company and it becomes this billion-dollar corporation, you're going to do really well. You're going to do really well. And you're going to do really well invested in something you truly care about, right? That's the opportunity that you have out there. That's what Zomedica is. That this is the dream right here. We can close the gap between the haves and the have-nots if the consumers understood that, look, instead of just going to Walmart when Walmart became Walmart and buying all their products, if you would have bought their products, put some aside and bought their stock, you'd be doing really well today, right?
Yep.
Sacrifice, but you will do well. And this is a company that is literally pennies, right? You can go clean out your couch, your car, get the spare change and buy the stock, right? I mean, that's true. Set up a lemonade stand, right? Sell some lemonade and buy some stock. That can happen for everybody. But most people think the stock market, that's for the elite. No, it's not. Average Joe can buy shares. You just have to think about it. You just got to do it. You got to find the companies. You got to do the work, right? This is a good one. This is a good company. That's why we're here. I don't interview companies that I don't think eventually are going to make their shareholders money. That's the deal. There are a lot of bullshit companies out there. This is not one of them. This is one that has a lot of good products. They have a screwed up share structure right now. Hopefully at some point that gets, we just talked about it. You are going to address that. This is a good story, man. This price that this is at is stupid. This is a stupid, and we're going to talk about that chart right now. I'm going to move your logo. Before I move your logo, if you're not in the stock, if you've never heard of Zomedica, I don't tell people what to buy or what to sell. I tell people the story. You need to do your own due diligence and decide if this is right for you. But you've gotten to know Larry a little bit. I think you could probably see right off the bat, he's a pretty transparent guy. And he's a good guy. So you look at it and say, if you don't want to buy the stock today, put them on your radar. Go to their website, sign up for investor alerts, and just keep paying attention to what's happening at the company, right? So I'm going to move this real quick so that we can talk about the chart, because it's stupid. The chart is stupid right now. Would you agree with that, Larry? The chart's stupid. This stock is at its all-time low. Now, would you really think that that would be the case after listening to everything that we just talked about? Right? These are all positive moves that, I know I can't move that. These are all positive moves that we're talking about, and the stock is at its all-time now. Now, why is that? It's not just because of it's the whole freaking market. That's the problem, right? Small caps have been out of favor. So look at what this stock is doing. It's been in a downward trend for a long time, but it's now putting in a double bottom, technically. And to me, that's when this starts to get very interesting, because you've got a lot of positive news. It just popped up to 15 cents. That was off your earnings call, right, Larry? So you just popped right up. right up into resistance, right here, right? And the reason I'm saying that's resistance is because if you go over here, you see this level here, and you see this level here, that was acting as support. Now that's acting as resistance. So it's technically the technical guys that don't give a shit about what Zomedica actually does. They just play the chart. They're playing their book. It's coming up into resistance. They sell it. Now it goes back down to support, which is going to be maybe 12 cents. And there may be the guys that are trying to push it below 12 cents, right? Trying to get it to close below there because they really don't know anything about Zomedica. They don't know what they do, but they do know that they have problems because they're under the 20-cent mark. And they can just continue to try and put pressure on that and close it lower. So you've got to have some real investors that will step up to the plate and not allow that to happen, right? You got to not allow it to close below 12 cents. Where it travels throughout the day doesn't matter. It's where it closes. That is what matters. And right now, this could potentially be a double bottom. If that's the double bottom, that means the bottom is in at 12 cents. Now, let's break this thing out of the long-term trend, which is down from the upper left to the lower right. And when you break the long-term trend, everybody listen to this. When you break that long-term trend that has been in place for a very long time, that's the dominant trend. When you take that out, it requires something that has more momentum, more force than the actual trend. When that breaks, that is a big, 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 big break. When you break the long-term trend, that is the beginning of a new trend that could be last for years from the lower left to the upper right, right? I think this company, if you look at it fundamentally, if you look at it from a technical standpoint, I think there's going to be a change. I do. I really, truly believe there's going to be a change. And I think also the fact that the economy is probably going to change because we're now cutting interest rates, which is good for typically small companies, right? So everything is lining up in my mind. And this, I think, would be a good place. I'll tell you what, Larry, after we're done here, I'm going to join you.
Excellent.
All right. I'm not going all in, but I am going to at least join it because I should join it. You're a good guy.
Well,
Right?
welcome aboard.
Yeah. All right. So that's what I recommend. Go to the website, sign up for their investor email alerts. That way, whenever they announce something, it goes right to your email, and you don't have to go searching. It's right there, and just keep up with what's happening with the company. Do you feel as though I missed anything?
No, I think we had a good talk.
We always have a good talk, man. We've never had a bad talk, right?
Yeah.
All right. When should we have you back? When should we have you back for a follow-up?
Why don't we get together again after next earnings?
Okay. Yeah. And that'll be what, March? When would that be?
Yeah, should be March. Yeah, should be March.
Okay. All right, man. Larry, I appreciate you. You feel as though there's anything that you wanna say to everybody before you cut this off?
No, other than if you're a Zomedica shareholder, we appreciate your support. And if you're not yet, come on, join us.
All right, all right. Thanks. Thanks for tuning in to another CEO interview here at Alpha Wolf Capital. Today we had Larry Heaton from Zomedica, ticker symbol ZOM. I hope you enjoyed today's interview, and if you did, do us a favor. How about giving us a like? How about giving us a share? And while you're at it, make sure you smash that subscribe button. We appreciate all of those things here at Alpha Wolf Capital, and we appreciate you taking the time to do that. Until next time, stay safe. Alpha Wolf Capital wishes you the very best of success.